We are tracking shares of Chartwell REIT. We know that retirement residences over COVID took a hit, but since then it's become a recovery story. Canada's Chartwell Residences has increased and outperformed the other real estate investment trusts out there. They reported their results yesterday where revenues were up over 12%, boosted in part by rental rate increases, but also higher occupancy. The company noted that they expect occupancy to trend upwards and hit their 95% target in 2025. For more on their earnings, let's bring in Vlad Volodarski. He's the CEO of Chartwell Retirement REIT. Vlad, thank you so much for joining us. I am comparing you to the REITs, even though technically I think you're in the healthcare index. But, you know, I'm not going to compare you to a marijuana company, I don't think. So let's just talk about that recovery, you know, since the pandemic and how you're progressing towards your goal of 95% occupancy.
Thank you, Amber. Good afternoon. We are pretty happy with our results. Our teams were able to carry the strong occupancy growth momentum that we experienced in 2023 into the first quarter of this year. We continue seeing quite significant growth in our leading sales indicators, initial contacts, personalized tours, and signed leases. And we see the occupancy continue on the growth trajectory this year and into the next year.
The government, the provincial government, I should say, the Ontario government has announced, substantial funding for for either new or redeveloped long-term care homes. How does that factor into your thinking, how you operate, and how you think about your assets?
These investments are definitely very much needed, in particular in Ontario, but actually in every other province in the country. We need more long-term care beds to accommodate the growing demand of the senior population. The funding that the government allocated in Ontario predominantly will be used to rebuild the older long-term care homes. They called Class C homes that were built 30, 40 years ago, and that needed to be rebuilt. And not a lot of new supply, I expect, is going to be added to the system, but these fundings definitely needed to maintain at least some sort of equilibrium in the long-term care sector. We don't see this impacting significantly our retirement business. As you know, we exited our long-term care business last year, and we're fully focused on predominantly private pay retirement accommodation.
And to that end, I think you've been in this area of figuring out what assets you want to keep, what assets you want to grow into, what you want to sell. On some of the sales that you were seeing, what is the market like? What is the environment like? Who are the buyers?
We are looking, one of the key priorities for us is to continue our portfolio optimization activities where we're repositioning ourselves to own new generation properties across the country. We believe that those properties will be more competitive in the marketplace over a longer period of time. And as part of that strategy, we have disposed and will continue to sell some of the non-core assets. Usually for us, these will be assets that are smaller in tertiary markets, where it takes really a lot of effort to manage, and probably better suited for smaller operators and not national companies like us. And those are usually the buyers for these homes.
In around mid-April, it was reported that teachers might be looking to sell Amica Senior Lifestyles. Would that be something that Chartwell would want to take a look at?
Amica is a great business. We know and worked with people who are operating this company over many years. At this time, I cannot really comment on the process that they're undertaking. It is their process, and it's up for them to talk about it.
All right. Well, you know, I got to try, Vlad. Let's talk about this area, because on one hand, it did go through a period of challenge and turmoil. But on the other, you know, when you look at demographics and aging population, it is one that is seen to be poised for tremendous growth.
Amber, I've been speaking about it for a long time. Actually, for the 20 years that I've been in business, people were talking about the gray wave and silver wave and baby boomers coming. The reality is they are coming right now. And this is kind of, we're the front end of this growth, significantly accelerated growth in demand. And we are at the point where there's never been a better time to be in senior living business. We have this wonderful dynamics of growing demand because of the growing senior population, which grows 3 to 4 times faster than the general population in Canada. We have environment where there's very few, if any, new construction starts happening because of the last 5 years acceleration of construction costs made a lot of construction activities non-economical. So we will have 3 to 4 years where there's going to be growing demand and very little new supply. And even if later some supply is coming, the demand will continue to grow for the next 20 years. And then you mentioned long-term care investments that the governments are making. And as I said, they're very much needed investments, but there will not be enough to meet the demand for long-term care accommodation. In Ontario today, there's 40,000 people on the waiting list, and the investments that are required to accommodate all of them is in tens of billions of dollars that the government will not be able to fund in this sector. So the retirement operators will have to fill that void and to provide additional care services to their residents so that they can stay there longer. And the last point is the obsolescence, which you mentioned some of the sales that we were doing on the non-core assets. And in fact, some other operators are closing their retirement residences because despite of the growing demand, operating smaller homes in smaller markets is very difficult financially without some kind of government support because they're smaller and the costs continue to escalate. And so this combination of the factors where you have demand growing, supply shrinking, and then some obsolescence really gives significant boost to those who continue to operate in the sector and do a good job for their residents. And we think that that situation will continue, and Chartwell is certainly best positioned to capitalize on those opportunities.
Vlad, as you look forward, there are still some legacy issues from the pandemic. There's a class action that has now been certified, and I know you got questions about that on the conference call. How is Chartwell thinking about your positioning on that? Are you building reserves to deal with any liabilities that you may have stemming from that?
No, we're very confident that certainly the claim is that the operators have not done enough to protect the residents during this pandemic. And our view is that we definitely prioritized the health and safety of the residents during this period of time. I know I've been here almost 24/7 for a long period of time trying to help with our team, to help our teams in the field to do what's needed for the residents. And, we believe that we done everything possible. The class action suit certification clarified that the threshold that the plaintiffs have to clear is gross negligence, which is a very high bar for them to meet and to prove. And even in case if there are some penalties that would be levied on the operators, in our case, this is fully insured claim. And so the combination of these factors results in our decision that we do not need to be providing for any potential financial